Hey Facebook world. How is everyone doing today? Happy Wednesday. Hope everyone has been enjoying this gorgeous, gorgeous, beautiful weather today. Today is May 15th, 2019. For those of you who don't know me or who are just catching this for the first time, my name is Kash, and I am the accounting consultant attempting to bridge the gap between CPAs and small business owners. Hi, Deneen. Long time no see. Thank you for joining. Where was I? Oh, yes. I am attempting to bridge the gap between CPAs and small business owners. And one of the ways I am attempting to do that is in 2019 is to come on live every single day with a tip, a tidbit, or some food for thought. As we are continuing our Accounting 101 lessons this week, we are talking about owner's equity. So I wanted to come on and make sure to let you guys know to track each partner, each shareholder, or each owner's equity separately. Okay, separately. So what does that mean? And some of you are like, no, I'm a single member LLC. I'm the only owner. No problem. Catch me tomorrow for my tax tip Thursday, right? But for those of you who are not single member LLCs, but maybe you have a spouse or a significant other, maybe it's your bestest friend in the world, right? And they gave you a little bit of money to start your business. Now, unless you're classifying that as a loan and you are going to, actively be paying them back in installments and having an interest associated with it, otherwise it's not a loan, they essentially just bought a little bit of your company, right? And you want to make sure that you're tracking them separately for a number of reasons. One, it's to recognize the fact that they truly do own a part of your business, right? I mean, especially if they put up a little bit of money in the, even if it's, what's a good word for it? Even if it's informal, right? Even if it's informal and they're not formal partners, they're not formal shareholders. You still want to recognize them. You still want to say like, well, you know what? At some point, I still want to give you this money back. Okay, so that's one. Two, you want to recognize it for yourself, right? So that you can remember and acknowledge the people who have been helping you and acknowledge your partners. Now, if you have multiple partners, you have multiple shareholders, one of the big reasons to track them separately is because you need to give them, your other partners, your other shareholders, their stake in the company every single year for them to do their taxes. So if you don't track them separately on your books all year long, you're going to have to go back and redo all of that work for the entirety of the year. Sounds like a big old waste of time to me. So I'm going to encourage you guys to start now, right? Start tracking each partner's, each shareholder's, and each owner's equity separately. If you have 15 shareholders, you shouldn't be doing your books. You truly, if you have like 15 shareholders, if it's that big, please have a CPA come in and make sure to get those K1s done and make sure to get them done correctly. And then again, for all of my single member LLCs out there who are thinking to themselves like, hey, I don't have any partners. Sorry. Well, no problem. You don't have any other owner's equity that you need to track. Everything goes, and funnels down and through you. So no worries about that. But keep this in mind for expansion, right? Maybe you want to bring on a partner sometime at some point. Maybe you're starting a project in which a partner is coming on for a short-term project for just a little bit, right? Maybe they're just coming in as simply as a silent partner. Like, hey, look, they have absolutely nothing going on in the operations. They're nowhere to be found on, the articles of incorporation. They've just given us some money. So all of these different instances are going to be times where on your books and records, you're going to want to keep separate track of everything that's happening in your business. And ultimately, a big reason why you want to do this for all the small business owners out there is because you don't want to include their contributions as income, and you certainly don't want to include any distributions or dividends that are being paid out as expenses, as that is just a big old no-no. That's just not the right way to do things. So don't want to do that. Well, Deneen, thank you very much for joining me. I appreciate your presence. I appreciate your time. Let me know if you have any questions, or if you run across anyone who has any questions about multi-member LLCs or how to track people's equity. You never know, right? If you're having a great day, I'll talk to you soon. See you guys tomorrow. Bye.